Hello, it is Friday, the 14th of November, 2008, and this is Brian Shannon from alphatrends.net. We had a tough week here, is I guess the best way to describe it. We remain in a bear market. Yesterday, we had some encouraging signs with a big volume and that large green candle that was a result of the afternoon reversal. And today it was actually a pretty quiet day for most of the day until we saw that last hour. We still see that there's a lot of sellers left in this market waiting for higher prices. So it continues to be a short-term trader's market. When we look at the daily time frame, of course, we've got a declining 10, 20, 50, 100, 200-day moving average, and that means it's guilty till proven innocent. If you're going to trade the long side, they are counter-trend trades. And a lot of people were asking me, was that the bottom yesterday? Was this time the one that was going to hold? And it's only a guess if I say yes or no. What we have to do is we have to listen to the message of the market. Some of the levels that I'd pointed out as far as support, potential support, were first at 29.50. Intraday, I had shown the $29 level to be important because that was where that two-day VWAP was, as well as a 50% retracement basically of yesterday's rally. And I didn't draw that properly, but you get the point that basically from this low here up to the high right at the close yesterday, we gapped down, sold off, found a little bit of support, tried to find stabilization near that 38.2% retracement, but then the 50% retracement and two-day VWAP were found in the same spot. And I said that's not necessarily where you want to buy, but you want to look at the market for evidence that the buyers are gaining control. And at that point, we really didn't have it yet. Later on in the day, the buyers did take back control as it made some higher highs and higher lows in here and recaptured that daily VWAP. But again, when you're in a bear market, you have to be suspicious of every rally attempt, and you have to have one foot out the door basically. So we had a harsh sell-off here in the afternoon that really I think put a lot of fear back into people after the emotions yesterday were, hey, I'm going to miss this rally, confidence is running high. But the fact remains, bear markets take time to heal, and if you allow yourself to be emotionally whipped back and forth by this market, all optimistic one day and then hanging your head out the window the next day, as some people will have it today, then you're gonna make your life a lot more difficult. Instead, the best bet is to learn to objectively observe trend and try not to impose your beliefs upon the market too much. So on this 10-minute time frame that we're looking at, clearly we still have a declining 5-day moving average. What we would want to see next week is this 5-day moving average to flatten out. Hopefully this level in here can continue to hold. Just about that 28.80 is what I'd said yesterday, and I still think that's an important level because we had shaken out the new lows in here yesterday. We remain above there on a closing basis, which is mildly bullish, but only very slightly bullish. And I was saying that perhaps we're going to form an inverted head and shoulders pattern. Well, it looks like the resistance for that, or the neckline of that pattern, is at about 30.5, and perhaps getting back above that 30.5 level or so, then this market can rally a little bit further. But it's still a broken market. It's guilty till proven innocent. The burden of proof remains on the buyers in here, and you just have to go very cautiously and continue to, as I've been saying, day trade. Yesterday, after I'd posted some of those videos, people had said, hey, I like those videos of the intraday trades. Can you post some losing trades some days? And that's a fair enough point. Today, you can see here was a losing day. I lost $58.05. I didn't trade the QID or the QLD. Instead, I traded individual stocks. I lost $208 in AK Steel, made $488 in Amazon, lost an APL, BGC, and GTLS, and made just a little bit in WG, but you can see that the net result was a $58 loss. The losing trades, I mean, when I set to go record a trade, when I sit down and think, hey, I'm going to record this, because I sit down and think, why do I tend to record more good trades? It's because when I decide to trade, it's because I think something cool is about to happen, and it just happens that I subconsciously I'm choosing the better setups without realizing it to record. So perhaps I have to take more note of that and trade bigger size when I put the record button on. Anyway, let's take a look back at these markets because obviously it remains a mess and it's just day to day here. So the burden of proof again is on the buyers. We've still got we've got another down week. This is the lowest closing low on a weekly basis that we've seen all year in the Qs. GLD Gold, yesterday we saw some encouraging signs, so perhaps we rally up to that declining 50-day moving average. We saw a little bit of strength in here today, but overall the trend is still lower, so continue to be very careful in there. Oil continues to get hit. This is a good thing, obviously, for consumers. The USO was down another 5.6%, and it seems just like yesterday that we were paying $4 a gallon for gas. Now it's under 2, so we've got encouraging signs here for the consumer aspect. If you're trying to get long in oil, well, you're on the wrong side of it. Obviously, the trend is down, and it remains guilty till proven innocent. The Russell 2000 lost $3.67 today, right down 7.4%. So big percentage loss. We did hold above the lows, but on a closing basis, not quite the worst close, but on a weekly basis, it is the worst close that we've seen all year, and obviously for the last several years. And on the monthly, you can see we're down at levels not seen since 2003. So we remain in a primary downtrend, and these bear market rallies continue to ignite hope in people and think that, hey, that was it, that was the one. Did you see the news and that sort of thing? But every one of these rallies, these sharp rallies, has failed, and we've still got that declining 5-day moving average. So we still need to see work done, and you have to look at these rallies as guilty till proven innocent. It's up to the market to prove itself to whether you should be continue to hold or not. Here's a little trend line that we can draw off of the Russell 2000, and the patient remains sick, I guess. The financials were down 5%, or losing 68 cents in here today. They did hold above the closing. The low close that we had seen on Wednesday, but also on the weekly time frame, worst close yet this year. These markets are just a big mess, and they take time to heal. So on a 10-minute time frame, perhaps we're seeing an inverted head and shoulders pattern in here, but we've seen 100 of these inverted head and shoulders patterns all the way down. They're really nothing to get excited about. I only point them out because they're just so obvious. I don't look for these patterns. I don't scan for them. I just point them out when I see them. Getting above 1350, maybe we're going to see a little bit further strength. I think the important support in here is probably 1240. I would give it down to there. If it breaks below 1240, then we're probably going to see lower lows once again. And finally, let's take a look at the SPY. S&P 500 finished with a loss of 5% today, down $4.65. So, we've got a declining 10, 20, 50, 100, 200-day moving average. We can't get excited about one day's activity on big volume. It's tempting to look at it and say, wow, doesn't that look good? Look at that nice bullish candle and all the volume. But the only thing that pays is price, and price, obviously, we got pretty extended late in the day yesterday, gapped lower. It came down above this 2-day VWAP as well. We had seen this little resistance taken out. We'll drill down to a 1-minute time frame. This is that little resistance back above the VWAP. Nice rally in here, but then once it made that lower high and then a lower low right here, this is when the floodgates opened in that final hour, and we saw a resumption of selling and market closing right on the lows for the day. So this, I think the more important support right now is probably down near about 86. Breaking below that, then I think maybe we can continue to see lower highs and lower lows in this market. It remains a very dangerous market, a market that you have to be very aggressive about managing your risk, and I think the best way to do that is through day trading.